Do you know how many types of life insurance policies exist? It's not exactly dinner table conversation, is it? But it's a topic that touches us all, sooner or later. Life insurance, essentially, is about providing financial security for your loved ones when you're no longer around. It's about ensuring they're not burdened with financial stress during an already challenging time. It's about peace of mind. But life insurance isn't one size fits all. There are several types of policies out there, each designed to meet different needs. Some are straightforward, others offer investment components, and still others provide flexibility to adapt to your changing circumstances. It's like walking into a candy store, there's something for everyone. But instead of chocolates and gummy bears, we're talking about term life, whole life, universal life, and even something called index universal life insurance. So, let's delve into the world of life insurance policies. One of the most straightforward types of life insurance is term life insurance. Let's dive a little deeper into what exactly term life insurance is. Imagine it as a contract between you and an insurance company. You agree to pay a premium, typically monthly or annually, and in return, the insurance company agrees to pay a predetermined sum to your beneficiaries if you pass away within a specified term. This term can range from a few years up to 30 years or more. Now, what makes term life insurance attractive to many people? Well, it's simplicity for one. It offers a clear-cut proposition. You pay your premiums, and if something happens to you within the term, your beneficiaries receive the payout. It's also typically less expensive than other forms of life insurance, making it a popular choice for young families on a budget. But it's not all sunshine and roses. One of the main drawbacks of term life insurance is right there in the name, the term. If you outlive the term of the policy, it can feel like you've been paying into a system without getting anything in return. And if you want to renew or take out a new policy after the term ends, it could cost you more, especially if your health has declined. So, who might benefit from term life insurance? It's an excellent fit for those who have a clear end in sight for their need for coverage. That could be until your children are grown and financially independent, or until your mortgage is paid off. It's also a good choice if you want life insurance but can't afford the higher premiums of permanent life insurance. In essence, term life insurance is a simple and cost-effective solution for many people. It provides peace of mind that your loved ones will be taken care of, without breaking the bank. However, like any financial product, it's important to understand the terms and conditions before you sign on the dotted line. Next on the list is whole life insurance, a type of permanent life insurance. So, what exactly is whole life insurance? Whole life insurance is a contract between you and an insurance company that lasts for your entire life. Unlike term life insurance, which only covers you for a specific period, whole life insurance never expires. As long as the premiums are paid, the insurer will pay a death benefit to your beneficiaries when you pass away. But there's more to whole life insurance than just lifetime coverage. One of the major features of this type of policy is the cash value component. This is essentially a savings account that grows over time, tax-deferred. You can borrow against this cash value, use it to pay premiums, or even surrender the policy for the cash. Now that we've defined what whole life insurance is, let's delve into some of the benefits and drawbacks. One of the key benefits is the guaranteed death benefit. This means that no matter when you pass away, your beneficiaries will receive a payout. The policy also has a guaranteed cash value growth, giving you a safe and predictable way to build wealth over time. The drawbacks? The main one is the cost. Whole life insurance premiums can be significantly higher than term life insurance. This is because you're not only paying for the death benefit, but also funding the cash value component. Also, if you surrender the policy, there could be substantial surrender charges. So, who might benefit from whole life insurance? It might be a good fit if you have a long-term financial obligation like a special needs dependent, or if you wish to leave an inheritance or charitably contribute. It's also suitable if you have a high income and need a tax-advantaged way to pass on wealth. Whole life insurance is not a one-size-fits-all solution. It's essential to evaluate your financial needs, goals, and budget to determine if it's the right choice for you. Whole life insurance can be a significant financial investment, but it offers lifelong coverage and a cash value component. Before we move on to our next type of insurance, let's take a moment to compare whole life and universal life insurance. These two types of permanent life insurance policies have a lot in common, but there are some key differences that you should know about. Both whole life and universal life insurance offer lifetime coverage and have a cash value component, but how they handle these aspects varies. Whole life insurance provides a guaranteed death benefit and a guaranteed cash value growth. This means that you know exactly what your beneficiaries will receive and how your cash value will grow over time. In contrast, universal life insurance offers more flexibility. You can adjust your premium payments and death benefit as your needs change. However, this flexibility comes with a level of complexity and requires careful management to ensure your policy doesn't lapse. When it comes to cost, whole life insurance premiums are generally higher because you're not only paying for the death benefit but also funding the cash value component. Universal life insurance premiums, on the other hand, can be lower and more flexible. But again, managing these premiums requires careful attention. So, which one is right for you? Well, that depends on your financial needs, goals, and budget. If you value guarantees and are willing to pay higher premiums, then whole life insurance could be a good fit. If you prefer flexibility and are comfortable managing your policy, then universal life insurance might be the better choice. Remember, choosing the right life insurance policy is a significant decision. Take your time, do your research, and consider speaking with a financial advisor. If you found this comparison helpful, don't forget to share, like, and subscribe to our channel. Stay tuned for more insights into the world of life insurance. Universal life insurance is another type of permanent life insurance with more flexibility. To kick things off, let's define what we mean by universal life insurance. It's a form of permanent life insurance that provides coverage throughout your lifetime. But here's the twist: it also has a cash value component that can grow over time. In addition, it offers the flexibility to adjust your premiums and death benefit as your needs change. Now let's delve into some of the benefits of universal life insurance. The first and most appealing advantage is its flexibility. Life is full of unexpected twists and turns, and a universal life policy allows you to adjust your premium payments and death benefit to suit your changing circumstances. Another significant benefit is the cash value component. The money you put into your policy can grow over time, providing you with a nest egg that you can tap into if needed. But, as with everything in life, universal life insurance also has its drawbacks. The main one being its complexity. Managing a universal life policy can be a bit like juggling flaming torches while riding a unicycle. It requires careful attention to ensure your cash value is growing and your premiums are adequately covering the cost of insurance. If not managed properly, your policy could lapse, leaving you without coverage. So, who might benefit from universal life insurance? Well, it's particularly useful for individuals who have maxed out their other tax-advantaged savings options, such as 401ks and IRAs. It can also be a good fit for those who want to leave a tax-free inheritance to their heirs, or those who need more flexibility in their life insurance policy. In a nutshell, universal life insurance offers a blend of life insurance coverage and investment opportunity. It provides the flexibility to adapt to life's changes and the potential for cash value growth. However, it also demands careful management to ensure you're getting the most out of your policy and maintaining your coverage. Universal life insurance offers flexibility and a cash value component, but it requires careful management. Finally, let's talk about Index Universal Life Insurance, a type of universal life insurance with a unique twist. This policy is a bit of a hybrid, blending elements of insurance and investment. It allows policyholders to tie their accumulated cash value to a stock market index, offering a potential for growth that's simply not available with some other life insurance types. Index Universal Life Insurance is a bit like a roller coaster ride. When the stock market index increases, your policy's cash value can grow too. But here's the twist: even if the stock market takes a tumble, your cash value won't decrease. This is because the policy has a floor, usually 0%, which protects you from negative returns. Now, this may sound like a sweet deal, and in many ways it is. But like any roller coaster ride, it comes with its share of thrills and spills. One of the main drawbacks is that the growth of your cash value is subject to a cap, which means you won't benefit from any gains beyond a certain point. Also, the policy can be more complex and less transparent than other types of life insurance, which might make it a bit daunting for some. So, who might benefit from Index Universal Life Insurance? Well, it's a great option for those who are willing to take on a bit more risk for the potential of higher returns. It's also ideal for individuals who need life insurance but also want an opportunity to grow their cash value, especially in a favorable market. Keep in mind, though, that while this policy can offer significant advantages, it's not for everyone. It's essential to understand your own financial needs, risk tolerance, and long-term goals before diving in. Index universal life insurance offers potential for growth tied to a stock market index, but it also comes with certain risks. It's a bit like a thrilling roller coaster ride, offering high highs but also potential lows. So, strap in, hold tight, and make sure it's the right ride for you. So, there you have it, a quick rundown of the different types of life insurance policies. We've traversed the terrain of term life insurance, a policy that provides coverage for a specific time period. We've explored the realm of whole life insurance, offering lifelong coverage with an added cash value component. Universal life insurance, with its flexible premiums and death benefits, was also part of our journey. And last but not least, we delved into index universal life insurance, a type that combines the benefits of universal life while tying cash value to a market index. But remember, these are not just theoretical constructs. They are actual tools that can safeguard your loved one's financial future. Your circumstances, needs, and long-term goals will dictate the type of policy that fits you best. It's about matching the right tool to the job at hand. Remember, the best life insurance policy for you depends on your personal situation and goals, so take your time, do your research, and choose wisely.